Hi, and welcome to this week's look at the major news stories that are affecting the market so far. And this week we're going to take a look at the normal four topics, and that's the S&P 500 having a pretty good week. We're going to take a look at the CAD and how that's been faring after some statements from the Bank of Canada. Not doing quite so well. We'll take a look at the Great British Pound, particularly against the US dollar. That's not had a good week. And then we're actually going to go back towards the end of last week and take a look at the earnings and the report that came out from Amazon and what's been happening there since. So let's start with the S&P 500, and we've broken the 5,000 level for the first time in the S&P's history. Wednesday, the price exceeded that key psychological 5,000 level. What's driving the market? Well, it's been attributed to two main reasons. The first is the expectation of lower interest rates. Now, while some of the talk over the last week or so has been a little bit more hawkish, it's fair to say there is an expectation that at some point this year there will be a decrease. And in fact, on Wednesday, the head of the Minneapolis Fed, Neil Kashkari, noted that he expects 2 or 3 rate cuts this year still. Secondly, and there's no way getting away from this, strong company reporting for Q4 2023. As of last Friday, 46% of the S&P 500 companies had reported their Q4 earnings. 72% of those had an earnings per share higher than expectation, and particularly the tech giants. So all fairly positive. And as Market Watch knows, S&P's up 2.5% to the end of January, so for 2024 so far. And according to statistics, which we have to be a little bit careful of, since 1953, if the S&P grew by more than 2% in January, it gained an average of 13.5% by the end of that year. And the index showed this positive dynamic in 84% of cases. Now, as we've all heard many times, historical performance is no guarantee of future performance, but certainly a statistic that's raised a few eyebrows. Take a quick look at the chart. What does that show us? Well, the price is moving in the ascending channel. We're showing that in blue. However, the RSI indicates divergence, and the price is near the upper border of the channel. Thus, we can't really rule out a correction. That psychological level of 5,000 could become resistance. If the correction does happen, the bulls could try to resume a rally from the support around the 48.50 mark, an area of which the lower border of the ascending channel passes, as we can see. So nothing set in stone, but certainly been a positive start for this week for the S&P 500. Let's turn our attention towards some currencies. And the Canadian dollar strengthened after statements from the head of the Bank of Canada. Tuesday, the head of the Bank of Canada, Tiff Macklem, stated that monetary policy needs more time to ease price pressures. The main problem in Canada in suppressing inflation is housing costs, but he said that's not a problem that can be fixed by increasing or decreasing interest rates. It's worth noting the Bank of Canada have reduced inflation from a high of 8.1% in June 2022 to 3.4% in December 2023. But Tiff Macklem seems to be suggesting that the path towards that 2% target may take more time, and thus rates may remain higher for longer than was initially thought. Reuters writes that the first rate cut may only come in the summer. Now, the market reacted to these statements and this news with Canadian dollar strength, primarily driven, I should say, by Macklem's relatively hawkish rhetoric. Now, the dollar CAD chart shows us the price declined, making false break below 1.3535, which served as resistance in January. It could be a possible sign of insufficient demand. At the same point C formed, which is approximately the 50% level in the decline from A to B that we can see on the chart. The MACD indicator demonstrates bearish dynamics, giving potential to believe the bears may become more active and return the dollar CAD price within the framework of the descending trend that we can see in red on the chart. Positive for the CAD, relatively good week. Fairly clear but slightly hawkish statements from the head of the Bank of Canada, all coming into play. Currencies are looking a little bit volatile, so don't forget your risk management techniques. Okay, so whilst a positive week so far for the Canadian dollar, not so great for sterling. In fact, Cable, so that's British pound against the US dollar, shows volatility, as we've mentioned, and the pound demonstrates some pretty low performance. Earlier this week, the Great British Pound was awarded the dubious accolade of being the second worst performer out of all the G10 currencies. Not great news in itself. Various reasons being blamed by analysts. Certainly we saw some lackluster retail sales data which did have a negative impact, and also they're saying investors are taking a cautious approach due to possibility that the UK might follow the US in not proceeding quite as rapidly with interest rate cuts in the near future as been hoped. But that's a little speculatory because, you know, we're hearing the same thing for the US dollar as the pound, and dollar rose against the pound over the last few days. Possibly the statements coming from the Fed were a little bit stronger than we're hearing out of the Bank of England in terms of pushing those rate cuts back a little bit. But the statements are certainly contrary to what a lot of analysts expected, and there was an awful lot of talk of a cut in spring and one in summer, and we're not quite sure how that's going to go now. The retail figures weren't great for the Great British Pound, as I mentioned, but conversely, unemployment data was actually much more positive. The UK unemployment rate fell to 3.9% in the 3 months to November 2023, and that fell from 42% in the 3 months to August. Pretty healthy sign, but retail sales lackluster. So volatility has been abound, and in fact we've seen cable, Great British Pound against US dollar, fall from the mid-1.27 range as recently as February the 2nd to the lower 1.25 range mid-morning of February the 6th, and mid-morning on the 8th of February, we're looking at around the 1.261 area. So whilst a slight recovery from that lower 125 range, still not particularly positive few days, it could remain volatile. So again, don't forget your risk management techniques. Okay, and we're going to finish off taking a look at stock as we often do during reporting season. And whilst this set of results actually came out last Thursday evening, worth taking a look at because it's Amazon. And the Amazon share price, in fact, increased almost 8% after their report. So last Thursday, the 1st of February, post-market, their Q4 earnings report came out. Revenue was $169.96 billion, above expectation, just, but still above it, of $169.92 billion, so still a positive. But the EPS is probably where the biggest surprise came in, the earnings per share, and that came in at $1. And that was against an expectation of $0.795, so 79.5 cents. That was received rather well. Now, Bloomberg reported the results of predominantly due to cost-cutting policy that's being followed quite aggressively internally. The focus on services that bring in money, ad revenues, for example, up for the 4th consecutive period. Sales of the cloud services increased by 13%, and they had strong holiday sales growth. After results, they also issued, as they normally do, so a little bit of guidance for the months ahead, and that was pretty optimistic, particularly talking about further increases in sales in cloud services. Now, as a result, the price increasing, in fact, it closed last Friday, $171.58 per share. That's up nearly 8%. If we take a look, say, pre-market Thursday the 8th, so almost a week later, we're still looking around the $170.5 per share. So the positivity seems to have followed through, although perhaps a little bit off the highs that we saw on that last Friday's close. Take a look at the chart. What does that show us? Well, the price is moving in the ascending channel that we're showing in blue. The price has obviously come rather close to that upper limit. The RSI, it does indicate significantly overbought. That's something to take into consideration in your trading decisions. And there's obviously a bullish gap above that 160 level. It's possible the Amazon price may be vulnerable, or in a vulnerable position, I should say, for a rollback from that upper boundary. Certainly, again, worth keeping your eyes on. The price is also approaching $180 per share, and that's worth noting because that's exactly where Jeff Bezos aggressively sold a significant amount of shares back in 2021, and that was followed by a slight downturn in the market. And according to corporate reporting, Jeff Bezos plans to sell circa 50 million shares this year. He's done it before at 180, so if we were to approach that, that may well be a trigger for him in particular, but also that could well turn that $180 per share mark into resistance. Certainly a good week. As we know, the S&P's been up, led by these tech giants, and Amazon's figures very well received. We wish you luck with your trading in the week ahead. Bye for now.